The Stock of the Day is brought to you by IG, Australia's #1 CFD provider. Trade over 17,000 markets with extended trading hours on key US shares and competitive spreads, all on an award-winning platform. Get started at IG.com.
Of course, we also obviously begin with our Stock of the Day, and this is off the back of results, and not such a small one. It is Block. Now, it is planning to sack 40% of its workforce, that's around 4,000 people, as it restructures its operations around AI tools. Payments and Financial Services Group saying gross profit for 25 rose 17% to 10.36 billion US. Gross profit up 24% over the quarter to 2.87 billion US dollars. Reported adjusted EPS per share of 65 cents, in line with estimates for the December quarter. Over the quarter, it delivered strong growth in lending with its cash app Borrow origination value up more than fourfold. It has raised its guidance for full year gross profit, 12.2 billion US dollars. So, as we can see, very impressive gains as far as Block is concerned. Richard, more to this story, of course. Is this sort of just the beginning of what we're seeing with this AI disruption, of course, because there are fears over job losses, the complete restructuring, if you like, particularly in those software firms?
Oh, definitely. I mean, Amazon kicked it off, but we are a small cap sort of the call, and we're starting off with a pretty big company. But yeah, I would say that it's a big company that has almost as much, if not more, uncertainty than a lot of the stocks we cover. And I think it's definitely what we're seeing. Like, it's analogous to WiseTech, isn't it, Andrew? Like, this kind of sugar hit that they're trying to get from cost cutting that does indicate kind of a lack of or a lack of ideas about growth. And certainly, companies try their first step is to buy back, and then the bigger call from management is these drastic cost cutting kind of initiatives. And like, if they work, they really work, but if they don't, they kind of gut the company and gut morale. And I think a better company in terms of one that's in the Australian universe is Telstra, to see how they've pursued AI sort of related cost cuts. And I think that stock has really done a lot better. And it's kind of like, but it does emphasize for us the importance of what you pay. So Telstra at $5, 4% yield is not as good as Telstra at $4, 5% yield. So for us, value comes into the equation. And like with the WiseTechs and the Blocks of this world, there's so much uncertainty that it's really hard to put a value on them.
Therefore, what would you do with it?
I would be selling into this. It doesn't send the right signals for me, because I just don't buy the story that you get rid of all these workers, it's going to be replaced and then some by AI. It's just often investing comes down to common sense and how you feel, like without actually having looked, like we don't cover Block.
Yeah.
Luke won't, but it just doesn't seem to ring true. It seems desperation.
All
I
right,
don't
Luke,
like desperation.
No, not as a stock picker, do you? So, Luke, what do you think? I mean, certainly they talk about those AI efficiencies this brings to bear. Is it just a sugar hit?
Look, probably not. I'm a bit more of a believer in the efficiencies AI can drive, to the extent of cutting 40% of your workforce. I tend to be lean more on Rich's side there. That seems a bit excessive, but no doubt, I think the examples of Telstra, the bank, some of the large enterprises on the ASX will be big beneficiaries as they sort of attack their cost bases. I'll say a hold for the program, Andrew. Rich is completely right. It's not a stock I'm looking at every day, but I think it was a good selection for stock of the day, even for a small cap show, just given more of that general topic on AI and what it means for these businesses. The actual result itself looked pretty good to me, and I think it was ahead of where consensus numbers were. But obviously, the headline grabber was the 40% headcount reduction, similar to what we saw out of a WiseTech, and even coming down to where Rich and I play Premium prior to their results, the wealth platform, something similar, called out taking a big chunk of their tech development headcount out. I had a tweet on X before, Andrew, and I sort of made a meme saying that I think the buzzword will be around AI efficiencies, but realistically, what I think you're seeing is these large enterprises just attacking bloated cost bases particularly in a post-COVID world, and these tech behemoths in particular. I think they've been operating with some very excessive cost bases. And in general, and what you find in markets, is that things are fine as long as the share price is holding up. And that hasn't been the case for Block. It hasn't been the case for a few of these tech names like a WiseTech and a few others. And it's the declining share price, I think, that gives these CEOs and boards a bit of a kick up the bum, to go and address that cost base. And of course, AI is maybe not excuse is the right word, but it's a convenient sort of off ramp for the business. So I'll say a hold for the program. Watching with interest with all this stuff though, but I actually agree with Rich. I think the one to look for here, the beneficiaries, are probably those big ingrained enterprise businesses where we know, bureaucratic style enterprises. There's going to be a lot of fat in those cost bases that can come out, and AI looks like it'll be a genuine benefit for them. So hold on Block, but pretty bullish on the potential for AI and sort of making these businesses more efficient.
Okay, so that is a hold and a sell for Block, and no doubt AI disruption, that is going to be an underlying theme of the stocks that we're getting across today.
The stock of the day was brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. Get started at ig.com.